Okay, welcome back. 160 lower now, so that make that what a 40-point slip since we started at 1:30 p.m. And it's all happening right here. July auto sales numbers for JLR coming through. Total JLR UK sales are up 10% or so at about 6,668 units. So this is UK numbers which are coming through. Stocks at about 126. eClerx has posted a weak set of first quarter earnings. The company has seen no revenue growth this quarter. Margins also saw a sharp decline. Mr. P.D. Mundhra, Executive Director of the company, is now joining in to take some questions. Mr. Mundhra, thanks for joining us. So can we just start there on the revenue front? What happened? Absolutely flat?
Yes. So first of all, thank you for having us. In revenue terms, we were down about 0.4% quarter on quarter, but year over year we were up 4.5% in constant currency terms. So in that sense, we saw some growth year over year, but not as strong as we would have liked. Margins, to your point, we were down about 30 crores on an absolute EBIT basis year over year. Two main reasons for that. One is, last year we enjoyed the benefit of a scheme notified by the government of India for services export promotion, which has not yet been notified this year. So we didn't take any gains on that basis. The corresponding figure last year was 12 crores. Another 13 crores was basically from FX gains, the foreign currency translation gains we had last year, which we didn't this year. So that was the main difference for decline in margins.
Mr. Mundhra, good afternoon, sir. The two big concerns that analysts have, one is, of course, that, while the shift to onshore continues, the revenues from onshore itself are quite stagnant. And the second is, the sort of stagnation in your top 10 clients. Like, I believe it's your non-top 10 clients now who are driving growth. So on both fronts, what's the outlook that you see for the year ahead?
Thank you. So I'll take the second one first. I think for us, for a long time, client concentration has been a risk for the company. I remember when we went public, our top 5 clients were 87% of revenues. So from a strategic perspective, we've always tried to grow the non-top 5, non-top 10 clients so as to diversify the revenue base and reduce reliance on a few names. To some degree, that's been successful, which is why I think for the last 2 or 3 years, we've seen non-top 10 growth being faster than our top 10 clients, and we expect that to continue. I think that's actually healthy for the business. And your other question was about onshore revenues. Onshore revenues have actually grown quite a lot. They're almost now 22-23% of overall firm revenues. If anything, I think we would want offshore revenue growth to pick up because that's obviously much more accretive from a margin perspective. Unfortunately, we haven't seen that really pick up in any meaningful fashion.
Okay, fair enough. Could you kind of talk to us a little bit about what kind of indications you have from your say top 5 clients in terms of the spending that you're likely to see for the rest of the year? Some sort of guidance would be helpful.
Sure. So I think spending patterns remain similar to prior years, but the nature of that demand is changing. So obviously clients have less appetite for doing pure vanilla transaction processing, BPO type work offshore, and newer demand is more around analytics and automation type of areas. So I think for us as a firm also it's been important to develop those new capabilities because the nature of demand is changing. But spend patterns should be roughly similar to what we saw last year.
Okay, Mr. Mundhra, it's a pleasure, sir. Thank you very much. Appreciate you joining us with some quick perspective on what the numbers may look like and what the overall situation is. So, this quarter, pretty poor overall, about 10.5% lower. The stocks are about 521 or so. 160 lower on the Nifty. The Bank Nifty is slipping a little bit once again. Is down about 2.25%. And things which were turned back into the green are down in the red once again. I mean, take Piramal, for example. I think Piramal Enterprises that come back into the green, it's marginally about 1% in the red. I think similar is the case with M&M Finance. It had become flat. It's down once again about 3% or so. I think Bajaj Finance, for example, is another one. It had come back to about, at least the futures had come back to about 32.10 or so. It slipped again. It's down a little over 2%. So across the board, there is a bit of a slip, which we are seeing once again. Okay, Mangalam is here. to take us through the ongoing moves in the market, sort of consolidating in one place. Mangalam, what do you have?
Well, we've seen a near 9-10% correction from the top for the Sensex as well as the Nifty, but the mid-cap index is where we've seen a near 29% correction. The mid-cap index is over a 30-month low. Most of the fall has taken place post the budget. So let's take a look at how the stocks have moved post the budget itself. 8-9% on the Nifty, while the mid-cap index and the small-cap index have lost 14 and 15% each. The Nifty Bank has also underperformed. Most of the sectoral indices, be it PSU banks, be it metals, or be it capital goods, they haven't been good. In fact, all of them have fallen 16 to 24%. However, the fall can be categorized into three places. The first one would be the group of stocks which were trading at a hefty premium, and there was a lot of growth, and then growth slowed down. So the likes of Titan, Bajaj Finance, Bajaj Twins, as well as HDFC Twins saw a fair amount of correction. The second pack is definitely the auto pack, because we've seen auto sales not pick up, in fact contract for many months in a row, and that is reflected in the prices as well. Ever since the budget and no SOPs coming in on the auto sector, we've seen a correction of almost 30% on Ashok Leyland. And the third one are private financials, all the NBFCs and some of the banks, owing to some future expectations of stress. So DHFL eroded half of its market cap ever since budget. RBL Bank down 40% as well. The other aspect was that there is some flight to safety, more flight to safety, some visibility of growth coming in. Asian Paints, Dabur, both these stocks higher from the budget day. Alongside, we saw traditional defensives like IT as well as pharma see a bit of purchase as well, the likes of Infosys, Torrent Pharma and Sun Pharma. But the mid caps, that's where the maximum amount of pummeling has taken place. And I'm not even talking about the cash stocks like Talwalkar, CCD or Cox & Kings. We've had Vodafone Idea down 50% since the budget day, 34% shaved off NBCC, and Dish TV down by almost 30% as well. This on account of relentless selling by FIIs, over 20,000 crores ever since the budget day. And such has been the force of FII selling that DII purchase of 23,000 crore has not been able to contain the damage. What is the extent of the damage? From the budget day, we've seen a market cap erosion of almost 15.7 lakh crores.
All right, Mangalam, thanks very much for that. And even as we speak, selling continues. Look at NBCC now down 10%. And, a lot of that, the last 3-4% has actually come in quick succession. On that note, we'll wrap up on Mid Cap Radar. Your stocks follows in just a bit. Stay tuned.